Sales revenue for the first quarter of 2012 increased by 7% to 1,479 million Swedish krona. That's an increase of 6% when adjusted for currency and structure. Operating profit EBIT amounted to 30 million krona, excluding one-off items of minus 38 million krona. The operating margin EBIT, excluding one-off items, amounted to 2%. The after-tax result amounted to minus 46 million krona. Earnings per share were 0.61 krona, and cash flow from operating activities amounted to minus 90 million Swedish krona. A good quarter overall. That's how Lindab summarizes the first quarter of 2012, which show growth in all three business areas. Sales revenue for the first quarter increased by 7% to 1,479 million Swedish krona. That compares to 1,377 million for the equivalent period last year. That figure being 6% when adjusted for currency and structure. The operating profit, EBIT, increased from minus 7 million Swedish krona to 30 million, excluding one-off costs. Cash flow from operating activities amounted to minus 90 million krona, which compares to minus 239 million the previous year. There was continued strong growth in the Nordic region, and also the CEE/CIS performed well, while the growth in Western Europe was lower. We link up now with Lindab's CEO David Brodetsky at the company's head office in southern Sweden. Now, what's your assessment of Lindab's performance in the first quarter?
We are pleased with the first quarter's performance, which is on the back of good sales growth and slightly reduced fixed costs. Although the first quarter is always a low seasonal period for Lindab due to winter, which affects demand for many of our products, it's very satisfying to report a profitable quarter at the operational level compared to losses in the first quarter in both 2010 and 2011.
Even with this improved profitability, your 10% EBIT run rate target by the end of 2013 and for the full year 2014 is still some way off. What else needs to be done to meet this?
There are basically two broad initiatives which will fill the gap from our current run rate to the 10% target. On the one hand, we have the 150 million SEK cost savings program which we announced in January, and on the other hand, we have targeted sales initiatives to grow sales and market shares. Some of these actions require time to implement and to start to produce results, and that's why the timing for the 10% goal is for the full year 2014. It's also worth pointing out that this 10% goal is in the light of current market conditions, and we are not relying on any significant market improvement to get there.
You introduced a new growth target in January with the goal of exceeding relevant construction market growth by 2 to 4 percentage points each year. How will you achieve this?
There are two sides to this. First of all, as the world becomes more energy efficient, building tight and ventilating right becomes more important. This trend will ensure continued growth of good quality building products and ventilation systems, which will in itself support sales of Lindab products over and above the underlying construction market in the years to come. On top of that, we have numerous sales activities in all three business areas and in all the markets we operate in, which will ensure we can take market share and grow sales further. Adding new sales branches to broaden our sales penetration is one example. Another example is the intensified direct sales initiative for selling buildings in Russia. And a third example is adding complementary products, such as sandwich panels, which came with the recent acquisition in Sweden. There are many other examples I could give. The goal is always the same: grow market shares without fighting on price.
Turning now to Per Nilsson, CFO at Lindab. Your net debt at the end of the quarter was 1,932 million krona, and the cash flow was better than the corresponding period last year. What are the main factors behind this?
We continue to strengthen our balance sheet and our financial position, which is essential for creating room to maneuver in the future. We have decreased our net debt by improving our cash flow from operating activities, which was minus 90 million kronor compared with minus 239 million kronor for the same period last year. A negative cash flow is entirely normal for the first quarter due to the seasonal effect, with a low operating profit and larger stock built up. The significant improvement of the cash flow this year is mainly explained by less capital tied up in stocks and receivables. And the net debt is 165 million kronor lower than the corresponding quarter last year, even after paying the 50 million kronor for the acquisition of Plania's sandwich panel business.
Looking now at the Nordic region, Lindab's largest region, sales rose during the quarter by 10%. Sweden, Denmark and Norway have all contributed to this growth with strong performances. The mild winters had a positive effect compared with last year. Sales are growing in Western Europe, albeit at a decreasing rate. Sales increased by 2%, adjusted for currency and structure. Sales in the CEE/CIS grew by 10%, adjusted for currency and structure, with Russia being the main driver for growth in this region. We move on now to the ventilation business area, where sales revenue during the first quarter amounted to 909 million Swedish krona. That compares to 846 million for the previous year and is an increase of 7%, or 6% when adjusted for currency and structure. Operating profit, EBIT, excluding one-off items, amounted to 66 million krona, which compares to 49 million for the previous year. That's an increase of 35%. The Nordic market, Sweden, Denmark and Norway all contributed towards growth during the quarter. Western Europe also developed positively, but the picture was mixed, with Italy and Ireland showing good growth, but sales flattening in the UK and Germany. Market activities have been high, with presence at 8 trade fairs. A new flexi shop, Lindab's self-service concept, opened in Frankfurt in Germany. Product innovations within the comfort range have been launched during the quarter. The Premium Premax chilled beam that offers the possibility of changing the air pattern, air volume and air pressure at any time without tools. And Pascal, the new VAV system, simplifying and optimizing all phases from design to operation. Turning back to David Brodetsky now. Ventilation performed well in the quarter and has improved profitability. What's driven this development?
Ventilation had a good start to 2012. The improvement in EBIT compared to the first quarter of 2011 comes from the positive impact from the sales increase, combined with good cost control. It's also pleasing that the efficiency in the recently opened production unit for indoor climate products in the Czech Republic has reached good levels. We expect to see further positive developments going forward as the benefits from the cost-saving actions within the business area and other actions start to flow through.
For the building components business area, sales revenue during the quarter amounted to 367 million krona, which compares to 354 million for the previous year and is an increase of 4%. Sales increase was also 4% when adjusted for currency effects. Operating profit, EBIT, amounted to minus 12 million krona, which compares to minus 17 million the previous year. Sales have been strong in the Nordic region during the quarter, with CEE/CIS declining, mainly explained by a tough demand situation and unfavorable weather conditions in the CEE countries. Lindab acquired the majority of Plania's project sales business during the quarter. The acquired business, primarily located in Luleå, concerns mainly the manufacture of sandwich panels and decking profiles, and employs around 50 people. The business, which is one of the market leaders in sandwich panel manufacturing in the Nordic region, had sales of around 150 million krona within the industrial segment in the Nordic markets last year. David Brodetsky, the Plania acquisition was completed on March the 19th. What importance does this have for Lindab?
Sandwich panels complete our industrial product offering perfectly. The product fits our simplifying construction business idea, since it both reduces site erection time as well as having good energy retention properties. For these reasons, sandwich panels are taking market share. And it's good that we can now offer this to both existing Lindab customers as well as to the new customer group that has been served by Plania up to now. The integration of the business into Lindab has gone according to plan. We recently launched the product at the trade show Nordbygg in Stockholm, and it was very well received by the market. We can now look forward to the additional growth possibilities in the Nordic market that sandwich panels will bring us, which is very important considering that the Nordic region is our largest market in the building components business area.
Turning now to the building systems business area, where sales revenue also increased during the quarter to 203 million Swedish krona, which compares to 177 million krona for the previous year and is an increase of 15%. Adjusted for currency effects, the increase amounted to 14%. Operating profit, EBIT, excluding one-off items, amounted to minus 10 million krona, which compares to minus 24 million during the previous year. Sales are developing positively, yet the order intake was weaker during the first quarter compared with the corresponding quarter in 2011. Sales remain strong in Russia, which is the business area's largest market, and the important market in Belarus also continued to perform very well. As part of the cost reduction program, a decision to downsize the production unit at Přerov in the Czech Republic was taken in February. David Brodetsky, Building Systems has performed better but has still made a loss during the quarter. It also seems that the order intake is weakening now. Are you concerned at all?
First of all, I'll take the question regarding order intake. It's true that the order intake in the quarter was lower than the first quarter 2011, and this was because last year there were some large Russian orders booked in the first quarter which boosted the figure. Reduced orders in just one quarter is nothing to be alarmed about in this business and doesn't indicate any significant new trend. Regarding profitability, the first few months are typically a low seasonal period for building systems and can give rise to operating losses, as was the case in both 2010 and 2011. Building Systems is cutting costs significantly, including the substantial downsizing of the Czech production plant. We have yet to see the benefits of these actions in the figures, but the savings will support the profitability later in the year, as well as the seasonal volume increases that can be expected. So to answer your question shortly, no, I'm not concerned. All of the right actions are being taken by the business area.
Our thanks to Lindab's President and CEO David Brodetsky. And you also heard Lindab's CFO Per Nilsson. That's all for this time. We'll be back on the 17th of July to present the results for the second quarter of 2012. Bye for now.